Good evening, everyone. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update here for our row crops on June 28th, 2023. What a wild and turbulent market this has been. We're going to take a look at corn and soybeans in more detail here today. But do think about joining me every Thursday at 1:30 p.m. Central Time, where I host the Strategy of the Week webinar. Sign up links in the comment section and information section of this video. But join me there where we'll cover these ideas in a little more detail, go over opportunities that we'll go over and risk management strategies in that webinar over the next several weeks into the end of the year. So um, the sell-off that we have witnessed in corn, I got September corn up here. I think we're going to start with December though. Um, was unprecedented, right? I think there was the call for uh, you know wet forecasts and decent rains and a good rain year from basically the beginning, and models have generally been pretty wrong in some areas, in some very key areas, right? And that's something we've been tracking, and we're going to cover in a lot more detail in tomorrow's webinar. Um, you know, there is a hole in the center of the country, that is dying for a drink, and it just hasn't come yet. We were supposed to have a weather event here into Thursday. Doesn't look like that's supposed to be there. I'd love to hear feedback from anybody here. Drop your comments in the comment section here about what the rainfall was like, particularly those in Missouri and in Iowa today. That we saw some radar throw a chance of rain there over you, but I know in my neck of the woods, which caught the very northern tip of that front, we didn't get anything here. Okay, anyway, we're in a weather market, and the pullback is, I think, very, very well, we had a very big run up, right? And the retracement of that run up is just price discovery of another magnitude, right? We could be very well in December corn setting up in a $5 to $6.40 range. And this is just the market, trading that range very quickly. Uh, it is hard to stomach. I'm surprised we haven't seen like limit moves, given how much this market wants to move. But I think that is why, I felt the need to hop on tonight and kind of discuss this, because if we do find a bottom where, this much of a pullback into the start of a new month, we've got a big report out on Friday. We have a shortened week and holiday week with July 4th next week, which, by the way, row crops will be trading from their Sunday night open all the way through to their close on Monday, and then they will not reopen again until Wednesday morning at 8:30 a.m. So that's a big gap in time where markets are going to have to digest new new weather. And we are going into a time of the year where if we don't get that rain, right, there are parts of the country that aren't going to really carry through and have a great yield. There's certainly other parts that we're not as dire right now, but I think everyone can agree to, barring 105-degree temperatures, if temperatures stay static, which this has been an abnormally cool year, um, which is why I think the drought has gone pretty unnoticed, and the struggle of the plant hasn't really shown itself, which is crazy to even think about when you look at conditions and how far they've deteriorated. Which all leads me back to the fundamental bias that we're still in a weather market, and this sell-off is just an opportunity to be long, right? And we're going to look at some opportunities in tomorrow's strategy of the week. Focusing, I think, on really, generally speaking, getting long corn futures and using put protection in the weekly options, right, to create a synthetic call in this environment, so that you have a floor in price with a put, um, but you have all the bang for your buck of being long futures. It's the way you can sleep at night and not really get ticked out of the market, because a traditional stop in this volatility can get hit. But a put not only gives you margin protection or some margin forgiveness up front, but it also, puts a floor in the overall risk, right? And then the soybeans, we know how much they can move, but I still like, in the way markets are pricing, implied volatility has been quite high. I kind of like coming at it from a call spread perspective. I'm looking at opportunities in the September options, because I want the I want to get through, the entire weather market, and looking at call spreads there. I want to get through the entire weather market into, August, when soybeans are, truly can be threatened. All right. Anyway, remember, trading futures involves risk and is not suitable for all investors. And everything I talked about here today is just my own opinion and not a direct trade recommendation. But do get in contact with me. My number's scrolling on the screen down there. My other contact info, if you are interested in talking about making this more of a trade plan for you. That's what we do here at Zaner Ag Hedge, is help turn these ideas into trade plans with our clients. So December corn has pulled into a full 50% retracement. The 541 area, the 100-day moving average, kind of the last line in the sand in terms of needing to break through or back, above all of these moving averages, and coming back down to test them as support. You can see the fight over the 200-day moving average. It took a couple days to crack it, but they did. They came down. It took a half a day fighting with the 100-day there at 555, and the 18-day there at 564, and crack those. And then we're fighting over the 55-day moving average, and arguably the only upward sloping trend line against the lows, the last one that you could potentially draw right on the chart, has now broken. Now that could be capitulation, basically trying to fill this 531 open gap. But so far the market just hadn't gotten there, and I'm not shocked to see it start to turn higher, and I would not be shocked to see this market retrace all of yesterday's sell-off and get back to the 18-day moving average to test it now as resistance if it wants to head lower, right? Because then now you've got to set up, if that's the case and we roll back over, we're probably going through the slow. The gap fill is probably going to happen, and we're probably going to be retesting that 490 low. We don't have to get down there, because again, I think maybe the market just says, no, we're really comfortable $5 to $6 for a while. Like, that's a fair range, and it's carved it out on the chart already, right? Okay, so September corn we'll go over in more detail, excuse me, in tomorrow's webinar. But that December contract, because it is a fresh chart now, but that December contract here for new crop corn, we've pulled back into this, inflection zone. The resistance that on the way up from our 490 low was, the highs for May at the 533 through 546 area, but really it was 533 there for 3 days. One here, two here, three here, resistance for 3 days there into the start of June. June then popped the top. We had almost a runaway gap, right? But then we kind of fall back down and retrace to start the month of June all the way back into May's range. At that point in time, though, right, we were talking about the full 50% long from the 490 low to the highs, kind of on the way up here, right? And hey, from that 490 low to the new high for June, boom, 519, 50% long, trendline support. We start to head higher. We then open up and gap up above that old breakaway area that we were trying to break away before, and we finally actually break away from it, pull back to hold it as support, now old resistance, now support, and off we went. We have now retraced because we really didn't have much of a pullback at any point in time to test any broken resistance as support, because there was no resistance. So there is no support until we get back down to the old level that really mattered, that breakaway gap. And sure enough, we come within 1 penny of closing that thing today. and we didn't get there. So very, aggressive downward sloping trend lines, trend channel lines here, resistance on the way up, perhaps for the market to roll back over. We've got kind of a cluster of them right around here into the 550 area, 560 of course, but at that point I think you got to say we've kind of reversed off this low. We're running away from an open gap again, and the 630 highs are probably just a stopping point into a narrative of weather market as well, right? We stay dry in the key areas, which we'll look at tomorrow, and how that drought map could potentially change or not change. But quarter inch of rain every 2 weeks isn't going to cut it anywhere. Not even a 2/10 in some places, and some places haven't had any. So it's a weird year in terms of volatility, but I think it's a very normal year in terms of weather markets. Weather markets are volatile like this, and I think we oftentimes forget that. Novi beans, 1271 last. A beautiful chart in terms of a technical structure of trading from a swing low up into a high and pulling back into a 50% retracement. 2 steps forward, 1 step back. Much like December corn, the November beans are pulling back into trying to test all the big moving averages that we were below and now have come back above. That 18-day moving average is where we have found support, along with that 55-day kind of around this 1240 to 1258 area, and the 1254 50% retracement. All good levels to think that if I didn't know any better and I was just looking for a long setup on a chart, boy, that one looks like the quintessential setup, right? Technical setup, where you're the buyer into the 50%, your stops are below the 618 line, and you're looking for targets up above the new high for a whole swing higher. And this is arguably what a chart looks like as it builds into that. Now, we can have a little bit up and down here as we find a secondary low before the swing occurs, but you also can't rule out, I guess, completely rolling over. But the fact that we're back above some key levels that we had kind of given up and fallen below there for a brief moment in the history of the November soybean contract. Excuse me. This $12 to $12.45 area, it capitulated below, and now we're back above. That was the old support for the better part of a year there on the November bean chart. Before any of that breakdown occurred, this is what the chart looked like sometime back in April. And we were all hopeful we were going to get that run up to $14. I was talking about it, but we also mentioned how we needed that narrative at that time because it was April, planting seasons. We're not even into a weather market. It's way too soon, right? Well, that was the warning. The market capitulated below those lows, and now we're back above them in an actual weather market, right? Now the narrative has shifted. And while beans can certainly recover better than corn, the carry out in beans is still incredibly historically tight. And China's crop is under just as much stress as ours is in terms of corn. But I think there's an insatiable demand in this inflationary environment where I think we're seeing that got a very uncomfortable tone, right, to the volatility. But that's how markets behave when we are rocking and rolling. So the 4-hour chart of November beans, kind of breaking back above some of those trendline resistances, coming back to try to hold them as support. That's very similar to what we're seeing on December corn, right? Those as well, those old trend lines against the contract highs up at 679 a quarter through the highs from October of 2022. We're back above those levels, and we've come back down to test them kind of as support now, alongside, right, this open gap and all these other technicals here. So it's not just one reason why we think maybe today was low, or I'm kind of going out on a limb and saying that, and making a video about this without trying to be overly bullish, but because I understand this was a painful pullback. And by the way, this pullback in corn and beans also could be considered a major liquidation event, right? Markets don't head in a straight line forever, and they need to kind of, excuse me, square up positions and what have you. Um, Anyway, the pullback in November beans into the 50% area with all these other reasons, has me thinking, okay, if the swing higher begins, 1430 is your first stopping point, and I think that's on a way to new contract highs and targeting above towards the 1530 area. And then let's not forget, from basically the 860 lows from COVID up to post-COVID or around that time lows to the 1440 highs for November beans in general. It was a 50% pullback into the $11 mark. And $16 could be that bigger swing upside target. That's going to come alongside, right? I think a narrative into August of real weather markets for soybeans, and there's going to be some up and down price action. And if we go back to last year for soybeans, at that time, they bottomed. Uh, they bottomed kind of after. The corn did. The corn had bottomed already for the year, or I guess seasonally, and soybeans had a few more, rounds of getting knocked down into November before they really, well, I guess they had a seasonal low in August too, but anyway, um, we will look more back in history on the charts later. Um, but I figured, hey, everything here was worth noting. That I think that if you were looking for a dip to buy in a weather market, a reason to get in, that hey, a week and a half ago when we were way up there at the highs of our charts, we felt that the market should go higher. Boy, this is the opportunity, right, that we were hoping for. I want to finish with one little tidbit, which is my last little piece of hope for this market, for corn, is if we go back to that 629 high, and closing that day at 629 and a half. This is a very weird pullback, right? It kind of faked everyone out. It just gapped. We opened at 624, and we never really went back. This kind of this open gap, or very weird area on the chart, that was then also met with another open gap here at the 618 quarter area the following day, and that one was real breakaway, breakdown gap, whatever you want to call it, the opposite of the 531 gap, if you really get, or 533 gap, whatever it is, if you really get down to it. But you have those two big levels in the chart. So hey, if the market came all the way back down here to 531, don't stop believing, bulls. I think we could potentially get all the way back up to 620, and hey, in this environment, if we do, yeah, I think there's a good shot of December corn still having a move to $7 in this year. And the narrative is there. The weather markets are there. It's just a matter of the shorts and anyone being sellers being convinced they need to get out, and then buyers just not being able to buy enough. I will admit this. We're going to have to start doing some number crunching, and that's something we'll cover in tomorrow's Strategy of the Week webinar as well, into the balance sheets for corn, because that extra demand, 750 million bushels, 800 million bushels, whatever it landed on, for in the balance sheet that the USDA added, in 2020, more than in addition to the demand from 2022, right? They raised it by that much. How far down, right, do we need to go in terms of national average yield to take that back out of the current carryout, right? Which then, if that's that effectively could put you with a push in terms of the balance sheet. So justifiably so, corn's been up at $7 with a balance sheet that looks exactly like it did last year. If you end it pretty much a push on production for the year, so to speak, and you don't add extra um, you know, you just got to go back to the prices you're at, and that was higher in my opinion. So anyway, I think the other story here that is not being talked about enough is the problems we're seeing in China. Even though I know South America had a major crop, China is having issues weather-wise, and I won't really be covering that so much, but there's a story and a narrative there that, maybe we're underestimating that demand. And if we are, that's where that extra demand can come in. And if that extra demand is there that the USDA is telling us, let's just play the tape where it is, and we have this type of carry out and everything, yeah, now you can see how we can get a narrative going to taking us significantly higher. All right. Thank you for joining me. It's been fun. Hopefully you can join me tomorrow with the Strategy of the Week webinar at 1:30 p.m. Central. Sign up in the links in the information section, comment section of this video. You can find me here on Twitter or on Facebook and on Twitter, or shoot me an email, dhussey@zaner.com, 312-277-0110 if you ever want to chat. Have a great day, everybody. Have a good night, and we will be back with you tomorrow. And as price action develops, take care, everyone.